Economic activity appears to be crashing almost like a slow motion car crash. We are seeing signs increasingly around the economy that shows that the tariffs, aka the uncertainty, is really driving consumers, businesses, and investors to quite simply sit on their wallet. When you take all three of those and you really don't help with the uncertainty level, you are going to get what you get. And we're starting to see things such as Domino's Pizza. Domino's Pizza was a darling of the pandemic. They missed on revenue, which means they sold less pizzas. And they also missed on same store sales, which means more and more people are staying out. Maybe for health reasons, that is a good thing. But again, in an economy, in fast food, signs of same store sales going down are never good. MGM Resorts is starting layoffs in their concierge staff at many of their casinos. We are seeing things like farmers who have product that doesn't age well, doesn't ship well, already feeling the pain from canceled orders, pricing pressure as demand slumps. What is that called, folks? That's called demand destruction. What does demand destruction potentially lead to? Deflation. Think about being a farmer who started planting a year ago because they had orders from China. I don't know, 100 acres, 200 acres, whatever it is. And suddenly you get to the harvest time. You've already had all the expenses, right? You've already done the fertilizer, the water, whatever you do, farming, no idea. And now you go to harvest it and China cancels the orders. You already have the product. You're obviously going to be seeking others to buy it. And also, more importantly, you're going to dramatically lower your prices or lose it to spoilage. This is something we saw in the first tariff spat in 2018. I believe the President Trump in his first term actually bailed out the farmers, if I remember correctly. I should go back and look, but I believe that happened. So again, what does one farmer say? No one can replace the volume that China buys. So again, we are feeling the pain, but don't worry, folks. This is not one-way pain. China manufacturers are pausing production and telling their employees to go home. Go home for a couple of weeks. This is getting real. The pain threshold will keep ratcheting up and will likely force negotiations for both sides. What else is going on? Man, there's so much stuff going on. Well, let's talk about earnings, because again, I think earnings this week, I think there's about 40% of the S&P 500 reports earnings this week. We are going to get tremendous insight into what happened last quarter, what was the inflection point, and how many companies will withdraw guidance, lower guidance, maybe be like United and offer dual guidance. There is a lot of things. So Monday, we've already had Domino's and MGM both reported this morning. You do get Waste Management, I believe, after hours. Tuesday, you get Coca-Cola, SoFi, UPS, GM, Royal Caribbean, Starbucks, and Snap. Again, it'll be very interesting to see what's going on at GM, UPS, Starbucks, Coca-Cola. It is going to be an interesting day. Wednesday, Caterpillar, Etsy, Wingstop, Microsoft, Meta, Robinhood, Qualcomm, and even Cheesecake Factory. What is going on with consumers? What is going on with heavy equipment? What's going on with fast food? And of course, big tech. Thursday, we get Roblox, Hershey, Estee Lauder, Apple, Airbnb, Amazon, Reddit, and Roku. I'm going to be interested to see Airbnb. I've seen more and more posts in my feed that are basically from Airbnb hosts saying, hey, the summer bookings suck. There was somebody that was talking about a property in the Northeast that typically is 90% booked, only has 2 weekends booked. Again, one data point, but I'll be interested in Airbnb, what they're seeing. Also, Folks like Estee Lauder, right? What's going on with makeup? Is it still the little treat, or are people even backing off that? And then Friday, we get ExxonMobil, Chevron, and Cisco Systems. So again, big week for tech, big week for consumers. Just, we're going to know a lot more about the U.S. economy come Friday than we do right now, because I think when you get 40% of the S&P reporting, you're going to get a pretty good insight to what's going on. I do want to highlight a couple of things that are coming your way today on the channel. At 10 o'clock this morning, Pacific, you're actually going to get a replay of, actually, no, you're going to get a discussion from Property Radar. Property Radar is a technology that I think a lot of users will benefit from. You'll see in that video where we talk about taking your concept of a buy box, taking that to a platform that can go from on market to off market, and even automate drip campaigns if you want to do a few mailers. This is a platform that the best of the best use, like Jason Pritchard, Adrian Hernandez, Omar Alfaro, and more. But again, as you'll see in that conversation, I really try to pin down the CEO to say, how can my people use it? So again, watch that video. More importantly, there's a comment in this stream, and I'll put it in the description, to a 5-day trial. I'm going to ask you to click on the 5-day trial and test it out. Why? Because on Sunday, I have the CEO of Property Radar coming to school, and we're going to ask him a bunch of questions. So my hope is the people that are a part of my school community, click on the 5-day trial, test it out, so that we can ask intelligent questions to see if we can use Property Radar as just, busy employees. We're not Jason Pritchard. We're not Adrian Hernandez. But as you'll see in the conversation today, I do think it's a platform that we could use and send out 50 mailers or postcards just to our buy box. I know a lot of us are looking in the MLS. It's what I do. But maybe there's a way to use technology just for a couple of dollars and reach off market. So give that a shot. The link's above, 5-day trial. And I'd love to have intelligent questions on Sunday when the CEO has agreed to talk to our community. On that end, we also have a gift for you. We did the 50-40-10 conversation yesterday with Stephen Dow inside school. Very well attended, which was awesome. I decided to give that to the YouTube world because, again, I believe that 2025 is the year of the investor. When I say that, you actually see this as one of the answers. What does that mean? Well, it means, A, you need to get your money right? You need to understand where your money's going. You need to make sure you're bankable. You need to make sure you have an emergency reserve. Please make sure that is there, because you just don't know where this economy is going. Number 3, you need to have a buy box, and you need to have that daily discipline, just the standard stuff we talk about. But this is where it gets creative. This is why that conversation on Sunday was so important. You need to skill up. For the last 3 or 4 years, the winner of a deal is somebody who had cash. In a buyer's market, which we are in now, and it is only growing. I don't know if you've checked the stats, but the buyer's market is here in most of the country, and it's getting more certain in other areas. I just saw on CNBC this morning that Austin, Texas is down 22%. That's a crash. Crash Bros got Austin right. Austin, Texas crashed 22%. Again, I saw that on CNBC this morning. If their data is wrong, I apologize. But again, that is a crash, because that's in 1 year, right? If you crash more than 10% in 1 year, to me, that's a crash. So again, we need to skill up. We need to learn other ways to buy. You need to offer a cash price. You need to offer a 50-40-10. You need to offer a seller financing. There's lots of ways to do deals of the decade other than price in 2025. And then finally, if you have the desire to take your discipline of buy box from on market to off market, Property Radar has promised a easy lift for you, the tech worker, the full-time employee, to start mailers or drip campaigns to your buy box. So again, take a look at that video. Comes out today. If you like it, give the 5-day trial a chance so that we can ask the CEO questions on Sunday. So I look forward to that. What else do we got? Scott Bessant. We're going to hear a lot more from Scott Bessant over the years. Scott Bessant saying that the U.S. is nothing more than a barbell economy. I thought that was interesting. So what are the sides of the barbell? On one side, you have tech and finance. On the other side, you have resources, think energy. And then in the middle, you have the working class, which have been decimated, according to Scott, over the last several years. Consumer sentiment came out on Friday. And again, we don't record on Friday. It was an ugly number. It was down 6 points month on month, down 26 points year on year, with the lowest reading since June of 2022. We are seeing passengers, right? People going through TSA turn negative. Again, we are seeing international bookings from Canada simply falling off a cliff. I don't know if you guys are aware of this, but Canada bookings for U.S. travel is down 72%. I have to imagine that is hitting airlines, but also the Airbnb market, right? I have to imagine a lot of these bookings were going to Airbnbs and short-term rentals and the like. So again, I do want to congratulate somebody for joining school yesterday. Dennis, thank you so much for joining. Folks, if you haven't joined school, I don't know why you haven't. 67 cents a day, free education, thousands of dollars in education, 6 different groups. I go live every Sunday at 8 a.m. Then I'm not traveling. Now we're bringing on special guests like Stephen Dow from Velocity Mortgage and the CEO of Property Radar. So hopefully you enjoy those. These are conversations that you probably can't have, but we can bring them to you at one rental at a time. So hopefully you appreciate that. Just to give you a taste of an accountability group, got this from Jared yesterday. Talked to contractors, Velocity Banking, LVP floors, and more. Again, if you're an investor, find the group that makes sense to you. You've got 6 to choose from. Go nuts. Other things that Scott Bessant has said. First trade deals might come this week or next. That is a net positive. We got to start putting some wins on the board. Says, I am not worried about empty shelves. Okay. We are moving quickly with 15 to 18 trading partners. India might be one of the first trade deals we sign. Lastly, a couple of things. We got IBM. IBM has pledged $150 billion to boost U.S. tech growth. And finally, shout out Joseph Wang. Joseph Wang runs a great YouTube channel and is a great analyst. Been on this channel a couple of times. Rebalancing of global trade, which is what we are doing with tariffs, likely mean tariffs are going to be higher than they were before, and that is bad for equities. I don't want to put any words in Joseph's mouth, but it does seem like he is negative on earnings and multiples, which would be obviously weak for stocks. So, folks, that's what I got for you today. Remember, take a look at the 10 o'clock with Property Radar. I really think it is a platform that folks like you and I can use. It's not only for the big boys. Also, devour that content with Stephen Dow. Learn creativity, learn how to pitch it, learn the rules of the road. And I hope you enjoy both of those. The link above or in the comments on the live, it will be in the description shortly for the 5-day trial. Hopefully you enjoy that. Take care. Have fun. Later.